Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. We are back with Lance Lambert, a Fortune editor and someone I trust to summarize all stuff real estate. How you doing, buddy?
Good. Housing. A lot of stuff going on.
Yeah. Well, one of the things I saw, tell people what your Twitter handle is, because it's something I saw you post in the last 10 minutes or so, is kind of a summarize of John Burns Real Estate Consulting, putting out some pretty scary numbers for the real estate market. So tell us what your Twitter handle is so people can follow you, and let's talk about what they had to say.
Yeah. So at News Lambert, and I share all the forecasts that I see, bearish, bullish, all of them. I try to get them all out there.
Yeah, absolutely. So John Burns Real Estate Consulting is someone I've spoke with Rick several times on this channel, someone I go to and been following for years. They're calling for some pretty significant drop by 2024 as I see it. So what'd you see, what they put out, and let's talk about their assumptions.
Yeah. So starting off, their assumption is through the end of next year, we're kind of staying around 6% mortgage rates. And if that happens, they believe that prices are a lever, that we're so high in terms of we're so unaffordable right now that prices would have to come down to get things moving. And I also believe they're probably, and they've said this in past comments, the builders kind of have a margin, they have a lot of inventory they need to put out there, so they're moving it. They think that prices will fall 20 to 22%. So they think by the end of 2024, we'll be back to the end of 2020. So a lot of forecasts think we're going to erase the spring 2020, right? They think we're going to erase all of 2021.
Wow.
And what they're saying is that historically speaking, inventory for sale is usually about 13% from builders. And right now we're 30. And that builders and iBuyers are more willing to move the inventory and bring the prices down. The thing they didn't say that I would like to asterisk next to this is that a lot of people don't live in markets with a lot of builders, right? Exactly. I don't live in a market with a lot of builders. I'm in the Midwest, Cincinnati. If you're in the Northeast, a lot of these markets don't have a lot of builders and they don't have a lot of iBuyers. I actually believe, my personal view is that the more iBuyers you have in your market, probably the riskier your market's been. And you probably have already seen that. You've already seen it move. But that's the John Burns Real Estate Consulting forecast. And among the forecasters out there, usually they don't publicly announce theirs. It just goes to paid clients, but they've been the furthest on, or among the furthest on the bearish side.
Yeah, and I would say they've been, at least in this cycle, the most bearish, right? I think they were the first, in my opinion, to go negative back when other people were like flat. So I think they've gone another step negative. Again, my opinion still is flat. I'm now on certainly on the positive side, or that's my bullish call, right? 0 is my bullish call. I do think that people are being distorted by a couple of things. First and foremost, iBuyers, right? Mm-hmm. Phoenix, Vegas, Austin, Sacramento, very distorted. But they're also forgetting they've stopped buying, right? It's not like they're adding more inventory to further lose money. They're exiting the business. And then as far as builders go, you're absolutely right. There's some builders that have product that they have to move and discount, but they're also slowing down and they're pivoting to build for rent. I think there's a lot of things. If John Burns wanted to put $1 on this, I'd happily do it. I can't see the country, the nation, seeing a median home price fall 20 to 22%, even by the end of 2024. And second, I think you talked about interest rates. I think there's a good chance that we're sub 6 on the 30-year mortgage by the summer of next year. I understand that's an asterisk, but I mean, rates are down again today, I think.
And so that's what I like to hear from the forecasters, is when they give their assumptions and they help to build a framework where they think prices would drop. And their framework is clear. It's that affordability is so pressurized, and mortgage rates, jumping up 3 percentage points after a 40% run up in prices. That's what moves prices down in their methodology. Zandy at Moody's Analytics, and they're at a 10% call for prices to fall. But if we go into a recession with unemployment going exactly 6% or higher, then they're 15 to 20% national drop. And so that one, it's like, okay, unemployment goes higher. They're thinking as prices drop more. John Burns Real Estate Consulting saying, okay, mortgage rates need to stay this high to keep this one going. But then there's other trains of thought here, which is, okay, we go into a recession, mortgage rates go lower, right? So how does that affect it? And Mark's, he would probably acknowledge that mortgage rates would go lower in a recession scenario, especially some 6% unemployment. But his model, it shows the prices dropping more. So I kind of like to see more of I like to see these forecasts, but I like to also know what some of the assumptions are.
Yep,
so we can get multiple different ways to kind of think about this.
Yeah, the one question if I could give Mark and John and his team kind of true sermon, I would actually, instead of talking about price, which is where everybody goes, I'd want to start with transactions, because I think we've seen transactions average 6 million for years. I think it's a decade now. And I was the first to come out, as far as I know, and say we're going sub 4 million next year. Now FHA has come out and said we're going to do that as well. I don't see how we get a 20% crash without the inventory to force 5.5, 6 million transactions. We have so much demand destruction, which everybody looks at, but we also have record supply destruction, which almost nobody's talking about. Even if you get laid off and you have a 2.8% mortgage, your mortgage payment is less than rent in most cities. Are you really going to give that up, or are you going to get a roommate? Or, is the job market still 5%? So you just get another job? Maybe not. I think people are distorting it because they're missing the hit to transactions. Transactions could go down 50%. And you don't get price declines when transactions go. The demand curve is just so different. People aren't adjusting for that.
Yeah. And my view is I don't make predictions, but I will say the reason that I follow this like I do is I just don't know. Like, there's so many uncertainties. There's so much going on. And I'm just interested to see how this kind of plays out and to kind of try to pick up some of the trends as they start to manifest.
Yeah.
The thing we saw this summer was inventory in the really frothy markets where you had a lot of the iBuyers, Austin, Phoenix.
Yeah.
They took off, right? That slowed way down. And then new listings really took a huge hit. And then you had inventory continuing to move up, even though new listings was down, but that was because the hit to demand was just so high. Days on market started to move up. Now, I just want to see what the next few months look like and see where mortgage rates move to. Yeah. And also, I mean, these CPI readings are huge. You got that one kind of favorable dip, and then you saw financial conditions really eased up. So I think, there's a lot of uncertainty, but I also think these next few months, we're going to start to learn more, especially once spring market comes back.
It's all about, on my channel, Lance, I've said we're basically in phase 2 of the housing crash, which again, for me is transactions, not price, until March 15th. And then on March 15th, if you could tell me where unemployment is and inflation is and 30-year mortgage, we can talk about what happens next, because you can look at those three things and see 20% crash, right? We're at 6% unemployment, 7% mortgage rates, inflation's still a problem at 8%. We're in trouble. You can also see it where mortgage rates are sub 6, unemployment's 4.2, and I mean, I have no idea what March 15th is going to be, so just gonna wait for the spring selling season.
Yeah, and I've kind of viewed it as the 2022 story's over. We kind of know what's happened. The only exception being financial markets and mortgage rates, right? Like these next few weeks, let's see where they are and where do we head into the spring season, and then how does inventory start to move up next year? I think all of that's really interesting.
Yeah, I think there's a good chance we're sub 6 mortgage rates in Q1, maybe.
And also, John Burns Real Estate Consulting coming out with this and saying it publicly doesn't mean that they just came up with this. Right?
No, of course.
And so this has been out there for a little bit. And I do think it's interesting to note that we're probably 6, 8, maybe 10 I think it's about 2 months since Moody's has done its last revision. So we've gotten to a point where there's not as many downward revisions in terms of prices.
Yeah.
And that's something that I do care about. I say, follow the trajectory, right?
Right.
We had a 3 month period or 2 months where prices, even like the groups were saying like, okay, we're going to stay flat, Goldman Sachs, then they're like, okay, 5-7%, right?
Right.
And we saw a lot of those swings. Now that's really slowed down, right? Just a few stragglers. And I now, we're seeing more stabilization in these forecasts. Zillow 2 months ago, within a 6 month period, they went from saying next 12 months, we're going up 18% more.
Saw that.
All the way down to 1.2. Now, the
saw
past 2 months, it's gone from 0.8 to 0.7. So even its model has really stabilized. So I like to also see the trajectory of those. And that's why I share them all.
Awesome. And again, I love that you do this. The one thing I would ask you if you get on the phone with these guys is ask them what their call is for transactions, because I think that's the missing ingredient. I think too many people have the demand still at 6 million. There's no chance we do 6 million transactions next year. And when the demand curve changes that much, price doesn't adjust as much. So Lance, where can people find you?
The one thing I'll say with Moody's is
Sure.
Zandy has said that he actually believed, and he told me this like 2 months ago, that the transactions in terms of the bottom was going to come really fast. Like we're really close to it. And his view is it would just take 12 to 18 more months for prices to bottom out.
Okay.
After that, he says
I would agree with that.
first,
Transactions first. Yeah. I think Mark's absolutely right. One more time, Lance, what's the Twitter handle? Where can people follow you?
People can find me at News Lambert. I'm very online, so if you have questions, tweet them at me.
Yeah, do me a favor, folks. Follow him and let him know you came from one rental at a time, so he knows that his time with us each week is worth it. Thanks, buddy.